Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Wednesday, October 22nd. Firstly to gold futures, and here we see a change of trend today. Previous day's trading, there was certainly a suggestion of a possibility of that occurring. The market once again being rejected from above the 1250 level. The sellers coming into the market very strongly, trading down through the previous low, establishing that new first time frame downtrend, and closing down towards the lows of the trading day today, closing with the sellers in control, very strongly committed to taking this market lower. If we do continue trading to the downside, potentially strong support at the 1237.9 level, the previous area of support and resistance, but also we have the Tenkan-sen trading just there, so it strengthens the amount of support around that area. If the sellers are strong enough to breach that area and strong enough to breach this area roughly around the 1230 level, we could see the market testing down to 1218 level where we see the Kijun-sen trading. We do have a bearish market in that longer term time frame, and that's suggesting that we could see continued downside, but the trends in the short and medium term time frame are trading above the Kijun-sen and Tenkan-sen are really quite strong, and do suggest that we could see the market test at two higher levels once again if we can find support around one of these areas. So a bit of a mixed bag here. In terms of the Chica span now, we do see the Chica span within the corresponding price action, so it's not confirming the bullishness or bearishness that we're seeing in either market, in either trend time frame, and it does suggest that there is some indecision within the time frames. But using our bands, that certainly does make the picture a little bit clearer here, and here we saw the squeeze previously, the breakout, the bullish breakout, the follow through, the upper band holding a support. Once again for today's trading, the upper band holding a support. So even though we have had a very strong bearish candle today, the sellers weren't strong enough to breach that area. So moving forward tomorrow, that is going to be an important area, and as we speak, as I speak, we do see support coming in around there, and that band, upper band, is at 1241. If the buyers do come back into the market strongly, that would be in line with us having a bullish bias, a strong bullish bias in this market, with the market trading up above the upper band. Moving next to NYMEX oil, and here today we've seen a change of trend back to the downside today. The previous day's trading we saw a change of trend to the upside on an indecisive spinning top type candle. Potential for very strong resistance overhead around the Tenkan-sen and just above at the 83-85 level, and we've seen the sellers come in strongly and importantly closing down below the 81 level in a strong bearish manner. Sellers in control. If the sellers are strong enough to breach this area around these swing lows around 79.80, 79, 77, we could see the market trading to the 77.28 level of support. That would all be in line with the market being bearish in all three time frames and supported by the Chica span. Now we had something of a small pattern that was set up for the last couple of trading days, 4 or 5 trading days, following this very strong dynamic first time frame downtrend, and we had this very quick forming pattern which is a pennant type pattern, and they tend to form very quick. They're quite small in relation to the prior trend. They tend to be continuation patterns, and here we have confirmation of the pattern with the close outside of the bottom barrier. A lot of confidence in this pattern with the bearish close as well, the sellers coming into the market strongly. The target is the prior trend leading into the pattern projected down. Before I have even greater confidence in this pattern, what I'd like to see is the market close down below these swing lows here. So probably wise for the least risk averse, or the more risk averse, sorry, to wait until we see the close down below this level and then see the pattern and the trend continue on its way. But this is usually a pattern that we see in very dynamic trending price action. It forms very quickly, and then the sellers come back into the market to the downside, and the break to the downside is in line with the trend being down in all three timeframes in terms of Ichimoku. Next to our bands here, and here we've seen continued price action down below the bottom band, highlighting the very strong negative bias in NYMEX oil. Previously, while this congestion pattern was going on, we saw the market testing to the bottom band and finding resistance there, and for today's trading as well as the day prior, we saw that area holding as resistance and very strongly rejected from there today. It does suggest that there is a very real possibility of the market breaking out below this 79-78 level and trading to lower levels.